And so one of the reasons I got into crypto was I think this is the most progressive industry. It's like progressive plus libertarian. Some weird, like, funny baby of left and right. But it has the capacity to really bring money and resource to the masses in a much more fair way, right? And so it hasn't yet. It's made small inroads, but really it hasn't lived up to its potential yet.
Yeah.
But that's the reason I got into the thing. I think when the ETF shows up, that will be the weapon of choice.
Yeah.
Why? Because it's easy. It'll have liquidity. It's the same brokerage account. They'll get margin on it.
Yep.
And so I think you'll see a lot more, both long-short equity funds, macro funds, institutional funds participate because it's easy.
Welcome back to Money 101. Mike Novogratz reflects on the unfolding journey of the year, commencing with Bitcoin's value at $16,500 and soaring to exceed $44,000 at the time of this recording. He expresses a sense of relief and contentment witnessing this recovery, juxtaposed against the trials of the preceding year. Novogratz recounts valuable advice received from a mentor and investment luminary, underscoring the significance of resilience and humility, particularly amidst market highs. The conversation delves into the hurdles confronting the crypto sphere, including the Sam Bankman-Fried scandal and the lingering perception of crypto as a potential fraudulent domain. Novogratz explores the crucial element of trust in decentralized systems, acknowledging the blockchain's initial portrayal as a trust machine that regrettably transitioned to a perceived fraud machine due to centralized business failures. He applauds the crypto community's resilience and patience in tackling these obstacles and reinstating confidence in the industry. Novogratz also touches upon the political landscape in Washington, D.C., noting bipartisan consensus on certain crypto-related legislations. Despite the hurdles and resistance, he expresses optimism about the industry's capacity to contribute to a more equitable financial system. As we delve into the video, feel free to hit the like button, subscribe, and share your thoughts in the comments section below.
In 30 years, the rich-poor gap has just gotten immense from the time I graduated from college. In the last 12 years, the cost of a house in America has gone from $190,000 to $390,000. It's harder and harder for people in the bottom 70% to actually fulfill their dreams. And I thought we need to do some more radical things. I don't think we should do them inefficiently. I don't think we should do them where markets don't play a part. And so you can call me progressive, you can call me center left. I think crypto had that capacity to help. I think it still does. What has been freaking infuriating is it's the progressive wing that doesn't want to see it that way. I tell you, I've been in DC a lot recently. There's bipartisan agreement, quite frankly, on the two different bills that are already there, on the stablecoin bill and on the...
Right, there'll be some push and pull, but like people would put something forth if they could.
100%, and it is this small cabal that's stopping it. Most people you meet with, they don't see this as partisan.
That's good to hear, because I was going to ask what this wing of the Democratic Party's problem, what is their problem with crypto? It doesn't, I don't understand.
I have not gotten it explained to me, and I've asked a ton of people. It's only used for bad stuff. It's only rich guys made money. The poor guys lost all their money. I was like, that's actually not the case. This is the first revolution where it started with the little guy. Matter of fact, I was like one of the only institutional, Dan Moorhead. There were a few players that got in early.
Right.
Most of the people got in early. You never heard their names. I remember I used to have conversations with some of the biggest fund managers in the world, right? Ray Dalio is a perfect example. Right. I remember trying to orange pill that guy over and over. It made zero sense for a $160 billion hedge fund to have a position in an asset that was big.
Right.
And so only at $500 billion, $1 trillion and real liquidity does any asset make sense for big portfolios, for the real big ones.
Right.
And so we have grown into, we're now big enough for anyone. We weren't when we were a $200 billion asset. We just weren't, right? Or a $100 billion asset. But as a $1 trillion asset, it's now big enough for almost anyone. And so what's the difference between Bitcoin and gold? They got the same macro story. And so I can talk about macro. The gold adoption story happened over 3,000 years. It ain't going anywhere. The Bitcoin adoption story is in it's the second decade. and it's picking up steam. And so what I mean by adoption is that people see it as a viable asset. What drives me freaking crazy is when Elizabeth Warren or Jamie Dimon or, at times Jenny Yellen says, well, I don't really see value in it. I was like, the gall, the arrogance that since you don't see value, there's no value. But Abby Johnson, oh, she must be stupid, right? Stan Druckenmiller, stupid. Ray Dalio, dumb. Jeff Yost, dumb. Pete Berger, dumb. Like the arrogance, you're looking at some of the best investors that have walked this earth that say, hey, there's some value in it, right? Bitcoin's value is the social construct. I say it has value, you say it has value, therefore it has value. I don't care what Elizabeth Warren says. Quite frankly, I don't care what Jamie Dimon says.
Right.
And they have been proven wrong, and the group of people that care about it have been proven right.
Don't think you're smarter than the market. Yeah. Market value.
Listen, you can decide I don't want to buy it. Warren Buffett decided he didn't like it. Charlie Munger, God rest his soul, passed away hating Bitcoin. They were wrong in the time frame to operate on. It doesn't matter. Charlie Munger made so much money. I'm sure he passed away with the biggest smile on his face. He was a great mentor to people. You don't have to be in every asset, right? I wish I bought Apple stock 20 years ago. I remember buying a bunch of it. I sat with Peter Thiel one day, and he convinced this group of people that Apple, Microsoft, Google, these weren't tech stocks, they were monopolies. And I was like, it just clicked. Every once in a while, an idea clicks. And so I went out and bought a bunch of it, all of it, and it had a great year. They were probably all up 30% that year. I sold them all. Mm-hmm. That was 2014.
Yeah. How has it done since then?
It's shocking. Once you realize something is a monopoly, you never sell it. 2024 is going to be, I think, an important year. I really think 2025 is the year where crypto goes.
Oh, interesting.
Maybe not in price, but I think it takes that long, right? We won't have regulation, I don't think, in 2024. We might, 5-10% chance we'll get it in 2025. And we need regulation. We just do. And listen, the election is in 11 months, and so then it takes 4 or 5 months. So you're really mid-25. I think that's probably when you see these tokenization things start getting to critical mass. And so in some ways, 2024 is going to look a little bit like 2023, with the exception of this giant fire hose called ETF, bringing new capital into the space. And what that capital does is allows people the time to keep investing in the projects that actually change the way people live, right? Bitcoin can change the way people save and protect their wealth, but it's not going to change the way the financial system operates, right? That's the plumbing of all this decentralized DeFi stuff and quasi-DeFi stuff, and stable coins and tokenized Apple shares and tokenized Stradivarius violins and tokenized whatever.
Right.
The Bitcoin and other money coming into the space allows me to hire people. It allows my peers to hire people.
Right.
It gives us breathing space to actually build out this revolution. And so thanks to Larry Fink. And actually, to be fair, I got to give it a shout to the Grayscale team for fighting that. And that lawsuit really was like, I don't think the SEC is doing this because they want to.
While the odds of a spot Bitcoin exchange-traded fund, ETF, facing rejection this month are slim, Bloomberg ETF analyst Eric Balchunas suggests that any potential rejection would likely be due to the Securities and Exchange Commission, SEC, seeking additional time rather than an outright denial. Speaking to Cointelegraph, Balchunas maintains a 90% chance of approval by January 10th, alongside fellow analyst James Seifert. However, concerns about the SEC needing more time prevent them from raising the odds further. Balchunas believes a complete denial is improbable given the substantial time and effort invested by both the SEC and Bitcoin ETF issuers. While a 10% chance covers all scenarios, Balchunas expresses doubt about a last-minute outright rejection, considering the considerable effort expended over the holidays. Another analyst, Vetlalunda from K33 Research, shares a similar outlook, putting the chances of an ETF rejection at just 5% in a January 2nd market assessment. In the event of an outright denial, Balchunas speculates that fund issuers may pursue legal action against the SEC following the precedent set by crypto asset manager Grayscale. Despite potential setbacks, Balchunas emphasizes that the commitment and investment made so far make it unlikely for stakeholders to give up easily. Public comments on ETF filings continue to be submitted, with a letter on January 2nd advocating for outright rejection. The letter suggests concerns about Bitcoin's decentralized nature appealing to authoritarian regimes seeking to evade sanctions and exert control. Share your thoughts on the credibility of this letter and whether it influences Bitcoin ETF approval in the comments section. Don't forget to like, subscribe, and turn on notifications. Thanks for tuning in.